Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, in one of our favorite places to visit, New Orleans, Louisiana, for the 43rd New Orleans Investment Conference. We're having an amazing time here, and you're going to meet some amazing guests today on the Real Estate Guys radio program. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2018 Goals Retreat, January 5th to 7th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the hundreds of people that have attended. Find out more at realestateguysradio.com and click events or call 888-489-7723, extension 18. Get your life back on track physically, spiritually, and financially. Attend the 2018 Goals Retreat on the first weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms, broadcasting from New Orleans, Louisiana. Let's say hello to our co-host, financial strategist, Russell Gray.
New Orleans.
Also joining us for a great and rare appearance, a man who's been hanging out with us in New Orleans. We call him the godfather of real estate, Bob Helms.
I'm happy to say I've been there more than once, and I expect to go back.
Yeah, this is the longest running investment conference in the United States, the 43rd year. Pretty amazing in terms of its legacy and its history. We've been for now 5 years in a row, and there's always something new to learn here.
Yeah, it's been a great conference. You know, after the 2008 financial crisis, and we've talked about this many times on the show, we realized there were so many things outside of real estate we really needed to pay attention to as real estate investors. So much of your job as a real estate investor is to manage your debt, your equity, and your cash flow. And we focus a lot on the cash flow, a little bit on the equity, not a ton. You know, when I was in the mortgage business, I spent a lot of time as a financial strategist showing people how to proactively manage their equity. Well, managing your debt's a big part of that. And a big part of debt is interest rates. And interest rates are found in the bond market. And so 2008 wasn't really a mortgage meltdown, and it really wasn't a real estate meltdown. It was a problem in the bond market, specifically in the derivative markets, and the collateral was the mortgage-backed securities. So the securities were the problem. The mortgage backing is just what they happen to use. And so not knowing anything about any of that, we started seeking out the people who were really smart in the space. One of those guys was Peter Schiff, who, of course, we've become good friends with, a regular on the Investor Summit at Sea. And the New Orleans Investment Conference is one of the places Peter shows up. And after we were there the first time, we thought, wow, this is great. All these amazing people, personalities, perspectives that we'd never heard before. And of course, now we're quite a bit more ensconced in the space, if you will, and learned a lot more. But it's been great. And we think first of all, big shout to all the listeners out there who came out. We had a great party. That was awesome.
Oh my goodness. We had a room full of 80 people. We met at least 40 listeners that had never been to any Real Estate Guys event who came out of the woodwork to show up in New Orleans. I don't know if it's because it was New Orleans or because we had Robert Kiyosaki hanging out with us or because they were going to talk about gold in addition to real estate. But we had a huge, fabulous time up there and a rare rich dad moment where we can't even steal the thunder, but it was extraordinary to be in that room.
Not only did we have a great turnout of our listeners, I talked to more people who said it was their first time there than ever before. And there was a huge new influx of first-timers who were, in the large part, gray and silver-haired, but there were a lot of young folks too, which was extremely encouraging.
I think, I just want to jump in real quick, because I think the thing, especially for the listeners who came, we talk all the time about the importance of going to live events and why we do it. People wonder, you spend so much time and so much money going around to live events. Why do you do that? It's to have a chance to be in a room with only 80 people, with Chris Martenson, Peter Schiff, Robert Kiyosaki. People say, I saw some people posting some of their pictures on Facebook and people commenting, oh, you're so lucky. It would be a dream come true to meet Robert Kiyosaki. Well, That's not luck. That's putting yourself in a position to get lucky. And
Right. How many weeks do we say, come to the New Orleans Investment Conference? If you're going to come, we're going to have a party Friday night. And hey, we're going to invite all of our friends. And there's a good chance they'll be there. Now, who knows what Robert's going to do with his schedule, but there's an excellent chance that when we invite him to a party, he shows up. And so far, we're batting 100%.
That's right.
So just saying, right? We put some clues out there. We're not going to say, hey, come meet Robert Kiyosaki. That's not what it's about. That's not why he shows up. He shows up as a student. He was in the classroom taking notes. He and I had a chance to go to a breakout session together. It was the end of the day. He had spoken. He was exhausted. It was tiring, but there's breakouts in the evening. I said, hey, Robert, before the party, you want to rest for a little while? You want to go grab something to eat? Or there's some breakout sessions. He says, well, who's in the breakout sessions? And I told him, he goes, let's go see one of those. So he and I sat in the front row and watched a session, and it was amazing. He is a student, but we're not going to say, oh, that's the reason to come. That's part of the byproduct of being in the environment.
Well, I mean, and there were so many other great people. You know, we met people that have all these diverse backgrounds. I had a gentleman come up to me I talked to last year, actually, and he remembered me from last year. It's another reason why you come back year after year. And he had sold his company, and he's now got millions of dollars of cash and no financial education. He's got no idea what to do with it. He's brilliant in business. He made millions of dollars, but as an investor, he's a neophyte, and he knows it. And he's smart enough to know that he knows it.
Right.
So he's starting with education. Robert Kiyosaki always says the first investment you should make is in your education. I couldn't agree more.
If you're one of those people who thinks you might like to go to this, but you're a little maybe intimidated because of the kind of people who are there, or you're just not confident about participating in networking, get over it. It's the only way you're ever going to be able to engage. I'm sure that if we took a poll of those who came who weren't sure they wanted to come but did, we'd get a pretty definite result that said, wow, am I glad I did that? I'm glad I put myself in a position to participate.
We regret the things in life that we don't do a lot more than we ever regret the things that we do. This conference is unique in a lot of ways, but primarily it's a resource conference, which means that their emphasis over the years has been on the precious metals, on oil and gas, on junior mining. But for the last several years, we've been bringing another viewpoint, a vantage point. The real estate is the ultimate resource, if you will. Everything comes out of the ground in the resource world, and we are talking about the ground. And so this year we got to do a couple of main stage presentations and met all kinds of different people in different spaces. Our good friends from International Coffee Farms were there. We had the folks from the Real Estate Fund Alliance. Of course, Gene Garino and his group was there. Think Multifamily. A lot of people came and showed up in the real estate space, which was excellent. We got to do our little booth tour. More people than ever showed up for that. And really, we could bring you a variety of topics. But today, we have 3 guests who have never been on the show before. So rather than sit down with Peter Schiff or sit down with Robert Kiyosaki or even sit down with Brian London, the promoter who's been on our show several times, I thought, let's bring some new perspectives. I was fortunate enough to be asked to MC a panel, and it was an amazing panel discussion on the future of money. On that panel, the international man, Doug Casey, the amazing Chris Martenson, who wrote the book Prosper, and of course has been on our Investor Summit at Sea. Next week, we'll have a deep dive with Chris Martenson on social capital, so make sure you tune in for that. And Danielle DiMartino Booth, who wrote the book Fed Up.
Yeah, Danielle was an insider at the Dallas Fed for a number of years. And so she kind of came out of all that with a real insight into the inner workings of, what the Fed is doing and what they're thinking. And, we always talk about the Fed as outsiders because we're outside of the machinery, and very seldom do we get a chance to talk to somebody who's an insider. We had a conversation with Atlanta Fed Vice President, I think Cunningham was his name, as I recall. Anyway, but this was many, many years ago. It's been a very, very long time since we've spoken to anybody, and she's a bright, energetic, articulate, amazing, dynamic speaker and brilliant person. So it was great fun to get to know her a little bit better, and we're hoping to see her again real soon.
Well, in fact, you're going to meet her today along with a couple other great speakers, so sit back and enjoy our show from New Orleans and the New Orleans Investment Conference, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Kendra Todd, winner of The Apprentice, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Heard every weekend on this great radio station all the time at realestateguysradio.com. Talking about money and getting our mind around the difference between money and currency and those things. And the gentleman you're about to meet gave an amazing talk here at the New Orleans Investment Conference about gold and cryptocurrency. Let's say hello to Chris Blasi. Hey, Chris.
Good morning, Bob. Thanks for having me on.
Absolutely. A pleasure to have you on the program, and really enlightening talk. And this is a big subject, right? People have a hard time getting their mind around the idea of a digital or cryptocurrency. And you took us through a really great session the other night. Can't obviously get through all that, but give us the big picture on cryptocurrency.
Sure. So cryptocurrency is obviously all the rage. There is a lot of disinformation and misinformation, and a lot of things that I think people need to be concerned about are getting glossed over because there's an awe of the rise in Bitcoin's price. So I think one of the takeaways I want to make is, and love to expand on the subject, is that the underlying technology, the blockchain, is something that is here to stay. It's going to manifest itself in a lot of ways. But things that utilize the blockchain, which is really just an output, can be in a bubble. And it does all because that price may go up and escalate. It doesn't, and it may not be sustainable, doesn't mean the underlying technology is going away. Quick analogy, the internet. Late 90s, people remember all the internet stocks, right? We had the tech wreck in 2000. Lots of companies got wiped away because they were tagged as internet related, but really there was no way of showing them being viable. But the internet is bigger than ever. So the internet would be today's, the example of blockchain, the underlying technology. You got to watch out of some things that are just using it and they get bid up.
One of the things you mentioned the other day is rather than make it, mysterious and hard to understand, at the end of the day, blockchain is software.
Exactly. That's the thing. I think there's a perception that there's something new and magical about it. It is software. And if we look, even with something like Bitcoin, which is obviously getting credibility because of the price rise, Bitcoin had a scaling issue. And if people are familiar with software and scaling, and developers had to get involved. And, from someone who kind of values privacy, and if I like to put my money in something, I like to know what's really behind it. Certain questions, basics like, who are these developers? Who's managing this, what they call the distributed database? It's just a database, and databases need management. And also, if humans are intervening, getting to the code, that's risk, because that means it's really susceptible to problems that any software would have.
Now, one of the things you mentioned is that when we think cryptocurrency, we might think of Bitcoin because that's maybe the most well-known cryptocurrency, but there are a ton of cryptocurrencies. Speak to that, about the competition, about the failure rate, some of those things.
That's a great point. Again, I'll go to kind of a little bit of a blindness because they've got everyone focused on Bitcoin, but there's this thing called ICOs, initial coin offerings,
right,
kind of like the IPO for stock. And there have been numerous ICOs of new cryptocurrencies that have failed shortly after, mostly because they were kind of just slapped together and poorly architected as far as the technology, and some were outright frauds right from the get-go. And this has cost investors millions. So the point is, this is why I think people need to step back and look at this market a little bit more and not get caught up. I'm sure a lot of people are hearing about these ICOs and you're able to buy a new crypto at $1, versus 5,000 plus for Bitcoin, but you have to be very careful. So this is a wide open market. There's no regulation. Sometimes that's good, sometimes it's bad, but there's a lot of risk. But I will not dispute that some people will make a lot of money, at least for the time being.
Now, let's talk about why you have earned the right to have an opinion about this. Your background is in precious metals, and you understand the metals market, and in fact, your company has a really unique way to invest in precious metals, actually a patented way. Can you talk about that?
Sure, Bob. It's called the Precious Metals Composite. So we use technology in a very light way, but as a way so that the PMC ounce is a unit of trade that directly has an inventory that corresponds to a physical inventory of precious metals. And think of a PMC ounce as a pizza pie with 4 slices. 1 slice is gold, 1 silver, 1 platinum, palladium. Depending how many PMC ounces you buy, that amount of each metal aggregates up, and the corresponding amount of good delivery or LBMA approved bars, which are sitting in the depository, that amount of metal is assigned to the client, and it sits in a allocated PMC ounce account, and the depository assigns ownership at the depository level. So where technology was used is just the ability to trade in real time on both buy and sell. There's no delay, that you're locking in the price, and the amount of metal that's needed is being acquired and on its way to being shipped into the depository.
Well, and what's unique about it is it's not like a paper derivative. It's actual metal that you own, but you own it in a way that the combination of the 4 metals and their weighting in your model gives you some pretty unique advantages. And then we can't show the beautiful charts and graphs that you showed us on the radio, but walk us through what this accomplishes. Rather than me just going and I'm going to buy some silver and some gold and some platinum, this accomplishes a couple of things.
Sure. The point of it was to give a turnkey physical precious metals portfolio. So it's not an actively managed fund. No one is buying and selling. Once you buy it, you have that set amount of metal that's in storage. But the way it's architected, what we believe is a logical weighting. Still, more than 50 cents of each dollar is going into gold because that's the primary. Then there's silver, platinum, palladium. But the design is to capture the blended return of the metals, but smooth out the volatility that's inherent when you're kind of in 1 or 2 metals on their own. And I think most listeners who are involved in precious metals are very aware of silver. Silver has great upside potential, but it is a highly volatile metal. A lot of people went piling in 2009 and 10, with the expectation of an imminent rise to 100 or 200, and here we are at 17. Now, I believe silver is going to achieve great things, but if you were in the PMC ounce, you would see, you were in silver, but since you have a position in platinum and palladium and gold, you had a much smoother ride. The metals don't move in lockstep, Bob. You don't know when they're going to rise. So you can't be a market timer. And probably the greatest shock to anyone who's looked at this market, for the last 5 years, palladium has crushed it. Done way better than gold, silver, and platinum is actually kind of flat to down. And really, except for PMC ounce holders, not many individual investors in precious metals had a position in palladium.
A lot of our listeners, Chris, are real estate investors, and we always look at broader picture economics and the compared to what, but one of the premises in real estate is if I have a diversified portfolio, instead of owning all my houses on the same street in the same town, if I diversify a little bit, then my portfolio is going to have that same effect. It's going to be less volatile. And that's kind of what you've achieved here with the metals, but to the point that it's patented. I mean, I could go figure out I'm going to buy some of each of these metals, but this is a unique way to own actual metal, but also the performance has been pretty good as well. You showed us some of those charts. How is it that the PMC ounce kind of outperforms the individual metals?
Sure, and it's like I said, I'll always play this disclaimer. We're not trying to beat the price. It just so happens since 2008, the price rise of the PMC ounce has outdone gold and silver. I mean, gold by 20 points. But it's this blended return. There's these other metals that bring value, platinum, palladium especially so. But the most important thing, it's a risk-adjusted return. And when you're managing a portfolio, right, it's about part of it is the intelligence is managing risk, and volatility is risk. So the PMC ounce tempers that extreme volatility if you're in generally one metal on its own.
Yep.
And therefore, when you look at it from the perspective of a real portfolio manager, they've used something called, there was one portfolio manager that ran what they call the Sortino ratio, which is It measures a risk-adjusted return for an investment, and the PMC ounce came out way better than gold and silver, and that's the logic.
There's a lot of folks who either are all for metals, and that is the only way to store value, and then there's the new crop of people that are all about crypto, and you kind of walk the line. You have both sides of it. So what are your suggestions as far as what can an investor do to keep their head in the game, learn about this stuff, and continue to kind of watch both of you well?
So I'll put it this way. Even you can see the mindset that I have, right, that I thought in a balanced portfolio within precious metals, and I'm not an extremist, right? So, a lot of our very good clients are real estate folks, and we've actually been bringing more and more on recently, kind of because of a sense of where they see things and how they just want to balance overall. And what I've found by talking to them is some of them actually, when they really get exposed to the precious metals, like it because it's tangible.
Yeah.
And these are folks that like tangible access. They like bricks, they like wood, they like something they can go to and kick.
Yep.
So kind of when they kind of get an education on the precious metals, it actually resonates more with them than saying, hey, go buy some stocks or bonds. That's a great thing. And I believe in balance, and you mentioned cryptos. I'm not saying yay or nay on cryptos. I'm not saying buy or sell. I just like to say, understand what they really are. Don't ascribe something to them that they're not. They're not a substitute for gold. There are some people running around saying Bitcoin's the new gold, and they're the polar opposite. And maybe they both play. I know the precious metals definitely play a part in a portfolio, and the cryptos offer speculative gains. And for the right person and do your homework, that's a great thing. Just do it in moderation.
All right, good stuff, Chris. Now, how can folks find out more about what you're doing about the PMC ounce?
I'd encourage them to visit our website. That's neptuneglobal.com. There's a lot of tools there. There's obviously just basic descriptions of the PMC ounce, and then there's a tool called the PMC calculator, which lets you go through a mock trade. It's all in real time, so the pricing is viable, but you get to see what actually gets acquired, allocated out with each trade, and I think that really helps people to see the logic of it and the power of it.
Awesome. Well, thanks for your great talk at the conference and for sharing your time with us today.
Bob, thanks a lot. Great.
Tune to the Real Estate Guys radio program more when we come back from the New Orleans Investment Conference. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the Perpetual Wealth Strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Hi, this is Steve Forbes. You're listening to the Real Estate Guys. Have fun. You'll learn something.
Welcome back to New Orleans, Louisiana, and the Real Estate Guys radio program. It's the 43rd annual New Orleans Investment Conference. Lots of fun here. Great sessions during the day, awesome food, and cool places to hang out during the night. And oh my gosh, what amazing guests. Before we get back to the interviews, it's time to play Real Estate Trivia, your chance to win a prize by knowing something about real estate and trivial matter. In fact, every week we give away a prize to the first person that gets the answer right. As soon as you hear the question and think you know the answer, just send us an email to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address so that if you're the winner, we'll send you out a copy of Second Chance, an amazing book by Robert Kiyosaki, one of the keynote speakers here at the New Orleans Investment Conference. Before we give you this week's trivia question, last week it was Halloween horror stories, and we asked this. In the classic movie Young Frankenstein, Gene Wilder plays Dr. Frederick Frankenstein, a lecturing physician at an American medical school. When he learns that he's inherited his family's estate after the death of his great-grandfather, Frederick travels to Europe to inspect the property. In what country is it located? Well, the answer is Romania, specifically the region known as Transylvania. Here's our real estate trivia question for this week. Where in the world was granola invented? Yeah, you know, granola. Had to be invented somewhere, and in fact, there is a place What big swath of real estate was where they invented granola? If you think you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Include your name, your mailing address, the answer to the question, and if you're fast enough, you'll get a copy of Second Chance by Robert Kiyosaki. That's today's real estate trivia question. Here we are in New Orleans trying to get our heads around all kinds of investments and ideas and big picture thinking, and the woman you're about to meet knows a lot about a whole bunch of things. We are thrilled to welcome to the Real Estate Guys radio program, Danielle DiMartino Booth. How are you?
I'm doing great today. How are you?
Really good. So you've been in private and public equities. You've done a ton of stuff. You've been a journalist and worked for the Federal Reserve for 9 years.
I've done it all.
Yeah.
At least once. Started at a firm called Donaldson, Lufkin & Jenrette that's no longer with us. But I learned a lot about private equity when I was there. And then I retired. I left Wall Street, signed a non-compete, went on to be a journalist. That was my lifetime retirement dream, and that's how Richard Fisher, who was at the Dallas Fed, found me, and that's how I got into the world of being a bureaucrat, which I did not enjoy, but I was there throughout the crisis and left and wrote a book called Fed Up, which I still am.
Yeah, so Fed Up is interesting because you're an insider in the Fed, and you have some views about the Federal Reserve. And,
just a few.
Yeah, so we'd like to talk about that a bit. I think most of our listeners are pretty clued in, but no investor left behind. You ask people what the Federal Reserve is, and they assume that it's a federal thing, and they've got a lot of reserves, and neither of those things are true.
Actually, they're not. The only thing that's federal about the Federal Reserve is the employees who work in Washington, D.C. The way I like to distinguish things, their email addresses end with .gov, and all the district Fed's emails, as mine used to, end with .org. It is a quasi-public institution that remits any and all funds to the Treasury after they cover their expenses. So it is not a privately owned organization, which I've just often get in tenuous arguments with people about. It is not, not private.
And it's a little hard to understand, but it's the central bank of the United States. And there's central banks in many, many countries, and in some countries actually come together and have a joint central bank. And so let's first talk about what is the need for a central bank?
Well, we're not a banana republic. Several years ago, over 100 years ago, when J.P. Morgan realized he was going to die after the Panic of 1907, he said, I'm not going to be able to bring people together in my parlor room every time there's a panic in this country and bail out the financial system. So it might be time, we might be an old enough, mature enough country to have a central bank, to have a source of the lender of last resort, which is what a central bank should be. Clearly, ours has crept right off the reservation. Mission creep infects our Fed, and we can talk about that forever, but it should be a lender of last resort. It should be the protector of the value of the dollar in our wallets.
Yeah, and really, it's been an evolution right now over 100 years, and there's no one who founded the Fed is alive, so they had some ideas and some, the philosophy, and now it has morphed, it has changed. It's huge, there's a lot to it. So I guess the big question is, moving forward, what is the role of the Fed and what should the role of the Fed be?
Well, it is huge, but it's also homogeneous. There's over 800 PhDs at the Fed. They've largely been trained in the same exact school of thought. Most of them are neo-Keynesians. More is more, which we've hopefully learned after 30 years since Alan Greenspan rode into the Fed and changed the culture of the Fed to be a more is more institution, which is odd in that he was influenced by Ayn Rand.
Right.
But that is what it has become, and they have leaned increasingly over the years on their labor mandate. So that is why we have seen interest rates stay too low for too long, because the Fed has moved into an arbiter of labor in this country, which should be a function, to your second question, of the private sector. So the first thing I would do if I was running the world, and thank God I don't, but the first thing I would do would be to take it back to a single mandate of just keeping inflation in check, just protecting the value of that dollar.
Let's talk about how the structure of it works, because when we're hearing the news, we're hearing about the Fed chairman, and people don't even realize maybe there's different branches of the Fed. I had an interesting experience. I was in Dallas, walking down the street, and I look up and I see, oh, that's the Federal Reserve. And as you know, they have a nice little museum, and
They do.
I went in, and you have to go through the metal detector and all that, and in my pocket I had an ounce of silver, as I often do, and I thought, well, this will be interesting, right? No problem, walk in. It was a beautiful display a lot of great information, and then there was nobody there but me. And I'm thinking, wow, it's just a surreal experience. But I learned a ton about the way that it works. And since you've been on the inside of that, in fact, in Dallas, how does the Dallas Fed interact with the Federal Reserve in general?
Well, every Federal Reserve has a purpose. And back when there were more actual checks being written in the country, every Federal Reserve actually had more of a function. There are 12 districts out there. They were conceived in 1913 when our country was a much different place. We don't need 12 districts anymore. We should add one to the West Coast. But the role of the Fed has changed over time as we've gone to a largely cashless society. So the need to have all these districts is clearly dissipating as a factor of time. I think we could get rid of 3 in the Midwest. The Chicago Fed could easily absorb them because they're not economically relevant anymore. What they do, though, is create lots of bills for taxpayers.
Yeah, and I think that, the general understanding of the Fed is at a very superficial level, but investors especially are paying attention to what they do. We've seen at this conference slide after slide after slide about debt, increased debt. We live in a country where our monetary system is debt. So in your book, Fed Up, you're not suggesting we abolish the Fed, which some people are. You're suggesting
I'm not
instead,
Ron Paul.
Right, no. Right, who wants to end the Fed. But you're actually suggesting some reform, some change. What are some of those ideas, Danielle?
Well, as I just mentioned, I think we should go from a dual mandate to a single mandate. We should take the labor mandate away. I think that would be A. B would be to reduce the number of district banks down to the number 10, add one on the West Coast. Janet Yellen, when she was running the San Francisco Fed, was clearly in over her head. One of my favorite anecdotes is that on the same exact day the San Francisco Fed was trying to extend a line of credit to IndyMac, the OCC was cutting it down. That brings us to C, my third suggestion, which would be that we would get rid of a lot of the regulators that we have for the banking system, bring it down to 1, and hire people for a lot of money that can actually read balance sheets, understand the inner workings of the financial system. That was clearly in absence during the years that preceded the global financial crisis because the New York Fed itself didn't see what was coming. And in order to fund that, I would get rid of, a good number of the 800 PhDs at these Feds. To go back to one of the questions you asked earlier, every single district creates every 6 weeks or so in front of the Federal Open Market Committee meeting, an international and a national economic briefing. We don't need that. We need to know what's happening in regional economies, and that's what makes regional Feds relevant. But we certainly don't need to have all of those international and national economic briefings. The other thing that I would do would be to give the districts permanent votes on the Federal Open Market Committee. I like to say that California is the largest economy in the country. God knows how. Texas is the second largest in the country. The fact that their district bank presidents rotate off of voting every 3 years, I think, is, in a word, excuse me, but asinine.
Yeah.
So those are a few of the things that I would do to really recreate the Fed. And you have to change the complexion of the Federal Reserve Board to actually be people who are on the receiving end of the policies the Fed makes, not a bunch of bureaucrats who get pensions for life and don't care that savers are not getting anything because it doesn't affect them personally. How lovely.
Well, and it's grown, it's morphed, right? I mean, it's a bunch of academics who are brilliant people, perhaps.
Absolutely.
But not business people, not in the quote-unquote real world, not where the rubber meets the road. And you see this happen in a lot of government agencies. It's just kind of that creep that happens, and before you know it, there's 800. That does seem like a pretty high number.
Oh, it's a huge number of PhDs. And what they largely do, and I can say this because I witnessed it firsthand, what they largely do is defend the dissertations that they write to get their doctorates basically for the rest of their careers with a very nice salary and benefits for life. It makes no sense to have all of these PhDs running around at the Fed because they're not serving the taxpayer, and that's what they should be doing. Ben Bernanke himself is probably one of the most intelligent people walking planet Earth today.
Right.
But his model dictated that we had to take interest rates to the zero bound, even though it made no sense in the real world where there was a banking system, a money market fund industry. Yield curves should have curve to them, but his model told him we must go to the zero bound before we can launch quantitative easing, and therefore that's what we must do, even if it makes absolutely no sense. So we need more rational, logical, real-world people.
Anytime you're trying to predict the future, it's challenging, but you look at the Fed's record over 100 years, not so great, right? So that's part of the challenge. And of course, this is the only thing you pay attention to. You write regularly. First of all, you were a journalist for many, many years, so you have that kind of in your background. But today, tell us about your newsletter and the ways that you
Sure.
get your word out to the folks.
I have teamed up with Dennis Gartman, and we have formed Gartman Media. I write under Money Strong. I publish once a week. My Twitter feed is probably the hottest in the world at DiMartino Booth, DiMartinobooth. That is also my website address, www.dimartinobooth.com. Jump on a trial subscription. I publish weekly. I write about commercial real estate very often, the pension system, private equity, public equity, China, you name it, I write about it, and it's never boring.
All right. Well, we actually spoke a little about real estate today, and I'd be remiss if we didn't talk a little real estate here on the show. So, what are you seeing in commercial real estate right now?
I think that I'm seeing the forest, whereas I think a lot of people are not. Sometimes you can get too segmented when you talk about commercial real estate, especially. You talk about these silos of industrial and office and retail and lodging. I think that what people don't realize is that as these B and C malls continue to die on the vine, they can only be repurposed for so long, that have been overbuilt, that as restaurants have followed in the footsteps of retail and been overbuilt, I think that a lot of commercial real estate investors are missing the forest for the trees, and that is there will be a lot of land underneath these malls and restaurants that won't be relevant in a few years to come, and that land, because it's centrally located, will cause a supply situation, a supply problem, an oversupply problem that will affect all of the sectors. So we've never seen commercial real estate as overvalued as it is today. We have an entire generation of millennials who are living in apartments. At some point, they will procreate. It will happen.
Yeah.
So there will be an oversupply situation also in multifamily. We don't have enough low-priced homes out there either. Baby boomers will eventually downsize. There are a lot of cross currents, but I would say that this is going to be a very troubling time over the next decade for commercial real estate.
That is a great insight. You know, we often talk about the changing landscape of the markets based on demographics. And of course, with the big downturn in 2008 and so forth, we saw a bunch of housing that was either strategic defaults or investors that didn't want to hang on and so forth. But if you do the math, Russ always says, if you do the math will tell you what to do. We're facing a housing shortage. We don't have enough housing for the population increase at some point in the next 20 or 30 years, and yet commercial, the very nature of commercial real estate has changed. You know, pre-Amazon, you had to go to the mall. Post-Amazon, you never have to go to the mall. And of course, the whole entertainment thing and trying to draw people out, and people do want to be social and hang around, but social media has changed that too. So there is this big shift and change, and of course, that creates opportunity for investors as well.
Oh, look, the commercial real estate developer who appreciates that they can buy these malls for pennies on the dollar to get the centrally located land underneath them, they will be the first dollar in, and they will be the smartest money out there once we start to see the overall asset markets turn, and they will correct at some point. When commercial real estate prices fall, it's going to be the guy with the dry powder who has a vision and sees the changes that you describe in advance and gets in at fire sale prices.
And that is the mission, folks. Danielle's been awesome having you on the program. Thanks for your time today.
Thank you. Appreciate
That's
it.
Danielle DiMartino book. Their book is called Fed Up. You can get it at all finer retailers and, of course, online. And check out her newsletter. When we come back, you're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Hi, I'm G. Edward Griffin, author of The Creature from Jekyll Island, a second look at the Federal Reserve. And you're listening to The Real Estate Guys.
Worldwide demand is making coconuts one of the highest yielding cash crops available today. Coca-Cola, Pepsi, and many high net worth individuals have invested billions of dollars into coconuts for strong growth and solid long-term income. Yields could be as high as 18% or more per year. Capital appreciation and exceptional income for up to 60 long years could be an absolutely brilliant investment to pass on to future generations. For more information, qualified accredited investors should email coconuts@realestateguysradio.com. Diversify wisely with direct ownership of fully managed coconuts on prime farmland close to the beautiful Costa Rican border. Email coconuts@realestateguysradio.com. This announcement does not constitute either an offer to sell securities or a solicitation of an offer to purchase. Offering made by prospectus only. For more information, email coconuts@realestateguysradio.com.
Hi, this is Doug Casey, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. I'm your host, Robert Helms. We love talking real estate, but real estate investors are first and foremost investors. We need to look at the bigger picture. A few weeks back, we had a special conference call with Brian London and Chris Martinson about an interesting topic. And to talk more in detail that, we found an amazing gentleman with Casey Research. Please welcome Nick Giabruno. How are you, Nick?
I'm doing great. Good to be with you.
It's good to have you here. You had an amazing presentation today. This was a topic that came up, was in the news for a half a second. We thought it was important. Didn't see too many more folks talking about it. So interesting to have you in this space. And you actually spent a lot of time with Doug Casey, the international man, and looking at specifically these kinds of things. A little bit about your background first.
Sure. Well, I actually met Doug in the Middle East. I used to work in and live in Lebanon, in Beirut, Lebanon. I cover frontier markets for an equity research house in Beirut, Lebanon. And Doug put it in his newsletter that he was traveling to the region, and if there are any readers that would like to get a cup of coffee with him, to shoot him an email. So I shot him an email, didn't think he would respond, but he did, and one thing led to another, and that's how I started working with Doug about 5 years ago.
All right, well, there's quite an education. That man's amazing. We had on the show before talking real estate. Doug can talk real estate for hours, let alone every other thing. But this story came out a few months ago about the Chinese government, oil, and gold. And we thought it was interesting enough that for the first time in many years, we held a special emergency conference call and got some of the folks we know on oil and gold to talk about that. From your perspective, what's the significance of this?
This is hugely significant because it's going to usher in a new era in the international monetary system. I think it's going to be as fundamental as the shift that occurred on August 15th, 1971, when Nixon ended the Bretton Woods system. Now, most people don't know what happened after Nixon ended the Bretton Woods system. So the dollar was no longer backed by gold. Most people understand that. But why would people still want to use dollars after that? So Nixon and his Secretary of State, Henry Kissinger, formulated a plan to give people a reason to continue to use dollars, and that is the petrodollar system. They made an arrangement with Saudi Arabia that, being the largest oil producer and exporter, largest member of OPEC, hugely influential in the oil markets, they made a deal that if they priced oil only in dollars, that the U.S. government would provide political, military, diplomatic protection to the House of Saud. And that gave countries a very compelling reason to hold dollars after the collapse of the Bretton Woods system. So, for example, if Italy wants to buy oil from Kuwait, Italy has to go on the foreign exchange market and buy dollars to pay Kuwait for that oil, even though the U.S. had nothing to do with that transaction.
In many ways, this is a big part of why we say the dollar is the reserve currency of the world.
Exactly. And CNBC put out a piece recently that said just in oil, okay, the oil market's about $1.7 trillion each year. Just in oil, if China goes forward with this new mechanism, it's going to take between $400 and $600 billion that would otherwise flow into the dollar and treasuries into Chinese assets and gold. This is huge, and the gold market itself is like $170 billion a year. So this is certainly not priced in the market, and it's certainly not getting the kind of attention it deserves.
Yeah, exactly. I mean, remember a couple of years ago, there were definitely some, moves in this direction, and the Chinese were talking to more than one country about settling. But the big difference here, as far as we're concerned, and I'd love to have your input on this, isn't just about settling oil in another currency, but the fact that they're going to back the currency to some degree with gold.
Yes, well, we know China has been accumulating gold at a rapid pace over the past few years, more than the past few years, and so now we know why. This is the main aspect of the Chinese plan to give their currency a more solid backing. Because what is the largest traded commodity in the world? It's oil, and then that's kind of the benchmark. None of the other commodities even come close in terms of the value that's traded. So if countries are trading oil in a currency, it just makes sense. It's just convenient to trade everything else in that currency. So China is really going for the jugular of the U.S. financial system in this move. It's not just China. The U.S.'s partner Saudi Arabia in the petrodollar arrangement. There's a huge development with Saudi Arabia earlier this month too that coincided with the Chinese announcement that this is really going to happen. So what happened? The Saudi king went for the first time in history to Russia, and he made a series of deals with the Russians. And one of the most significant of all these deals was a military agreement. The Saudis are buying the S-400 anti-aircraft system from Russia. Now, this is the Russians' best anti-aircraft system they have. And this is a capable system that's even capable of deterring, say, if the Saudis rip up the petrodollar system, they're going to have problems with the Americans, just like other countries that have gone against the petrodollar in the past, namely Iraq and Libya. So the Saudis are giving themselves options to protect themselves if they annoy the Americans, which it looks like they're about to do.
Yeah. Well, and I think a big part of this is just understanding that for one country to be able to come to an agreement is one level, but as soon as there's more than one country and now another and another, then it's a whole complete channel. And as you said, it completely bypasses the U.S. dollar, the U.S. economy.
Oh, exactly. And the U.S. is kind of shooting itself in the foot in this regard. Yes, it's not just one-off countries. It's a lot of countries. And what really started this trend is U.S. sanctions on Russia with what happened in Ukraine and Crimea. That pushed the Russians to interact more with the Chinese. And guess what? The Russians are now the number one supplier of oil to China, which is the number one importer. And all of that transactions happen outside of the dollar because of the U.S.'s actions. So the U.S. is really undermining its own system with its sanctions and its foreign policy. So it's bungling the very bedrock of its financial system.
We've been following Doug for a long time, right? The international man. He thinks globally for sure. And if you step back and don't look at through your U.S. lens and just say, wait a minute, country A is dealing with country B, but forever they've been using country C's currency. Why does that make any sense? Why can't they trade together? But when you look at the impact because of what's happened over the years as the dollar has become more and more crazily fiat, right? That this could be the first ripple in a big, big, big movement.
Oh, absolutely. So that figure that I mentioned earlier, that CNBC figure, $400 to $600 billion, that's an incredible amount of money that these oil producers don't necessarily need to put into U.S. Treasuries. Well, what is that going to do to interest rates? Who's going to step up to the plate and buy $600 billion worth of Treasuries each year? Is the Fed going to? What's that going to do to the currency? So this is how it's very clearly the petrodollar is connected to real estate, because the breakdown of the petrodollar is going to have significant consequences for interest rates, and this is, I think, the clearest example of how it could do so.
Well, of course, this is why we pay attention to this stuff, because most of our audience, real estate investors, and certainly they may have some other asset classes they're interested in, but it's like, well, what does this have to do with me? Well, just everything. Interest rates are a big part of the fuel that we use to acquire real estate.
Oh, absolutely. And not just real estate, anything. Interest rates are the price of money. It's a price. You have to think of interest rates as a price, just like there's a price of milk, a price of shoes. Interest rates are the price of money. And in my opinion, the government has no business setting prices of anything. Price fixing doesn't work with making shoes in the Soviet Union, and it doesn't work with central banks fixing the price of money with interest rates.
You'd think after all of the proof of that, it would be obvious, but we still have to talk about it. Hey, Nick, how do people follow your research at Casey? You guys do a lot of stuff, and you have all kinds of great reports and stuff. If someone's interested in the kind of work you do, what's the best way for them to find out about it?
Oh, sure. We have a bunch of free, great resources at internationalman.com.
All right, good stuff. Thank you very much. And you're tuned to the Real Estate Guys radio program. Lots more coming at you. I'm your host, Robert Helms.
Hi, this is Gene Epstein, economics editor from Barron's, and you're listening to the Real Estate Guys.
This portion of the Real Estate Guys radio program is brought to you by International Coffee Farms, where you can own a parcel of land in your very own specialty coffee farm in Panama for as little as $15,000. Here's how it works. Deeded half-acre parcels entitled Specialty Coffee Farms in Boquete, Panama are turnkey managed professionally on your behalf by a team of local experts. Sustainable average income is estimated at 12%, and cash flow can begin within 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm is committed to a socially sustainable fund to improve the lives of the Panamanian coffee farm workers and their families. International Coffee Farms currently owns and operates 9 specialty coffee farms with half-acre parcels available for immediate ownership. To find out how you can become a coffee farm owner in Boquete, Panama, email coffee@realestateguysradio.com. That's coffee at realestateguysradio.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hi, this is Donald Trump, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. We love to have you tune in every week, but especially when we have such dynamic guests. Oh my gosh, tons of information, great stuff, and a big thanks to Chris and Nick and Danielle for sharing those great ideas with us.
Yeah, absolutely. You know, this is why we like to hear from people that have different perspectives. You know, Chris is a precious metals dealer. He's in there in the trenches, figuring out a way to make metals work better for people. And he's got that technology background. He has a different take on the technology, you know, because he's a technology insider. That was extremely interesting. Most of the people who are talking about crypto don't really understand the technology side of crypto. They understand the concept, but they don't understand some of the nuances of what goes on deep down inside. So that was eye-opening. Danielle, she's an insider in the Fed. So again, you know, you can talk about it from the outside, you can theorize, you know, but you're listening to somebody now who has an insider understanding of what's going on inside there.
And perhaps a different perspective than anybody else that we've had on the show that's talked about the Fed. I mean, we had a gentleman on from the Atlanta Federal Reserve over 10 years ago.
Right.
But a lot has happened since then, right? So most of the folks we get are like G. Edward Griffin, who wrote a book on the Fed, and he's got an opinion about the Fed. Robert Kiyosaki has a different opinion about the Fed. Certainly, Peter Schiff has his ideas about the Fed. Danielle worked in the Dallas Fed for 9 years, and she has yet a different perspective.
Yeah, on the panel you did, you know, Danielle was like, we don't need to get rid of the Fed. Doug Casey was, we absolutely need to abolish the Fed. And so, you know, again, we're not saying anyone's right or anyone's wrong. We're like Robert Kiyosaki's taught us, we're standing on the edge of the coin, just trying to listen to all of these different opinions. And what we've got to do is look at what's going on in the world. And as investors, we have to make decisions. What do we think is most likely to happen? What happens if that doesn't happen, and if the opposite happens? If you only ever consider one outcome and you structure your whole portfolio, I know because I did this. I structured my whole portfolio for sunshine, and then all of a sudden the sunshine doesn't come and you end up with, you know, a little bit of storm clouds and you're not ready for it. You're not prepared. And then you're running down to the store to buy the umbrella and the raincoat and, you know, it's sold out. Now you're in trouble. You're out of position. So listening to these different points of view doesn't mean anyone's right or anyone investment strategy or philosophy that you take away is going to be right. What it does is it gives you context and perspective so that as you're making day-to-day decisions, as you're getting inputs of both ideas and information from the news, and then you have decisions to make in front of you in terms of what the marketplace, your demographic, your geographic, your particular financial situation is telling you, you have to make the best decision you can, plan A, plan B, plan C. And the only way I know how to do that is to have a lot of different perspectives on the table.
We've had opinions from a lot of people that we should abolish the Fed, end the Fed, let's get rid of the Fed. Look what it's done. It was interesting in her case where she not only said, we don't need to abolish it, there are just a lot of things that need to be done to improve it.
Everybody's got a different opinion, which is exactly why you come to events like this. So put it on your calendar for next year. It'll be in early November, the 44th New Orleans Investment Conference. Of course, big thanks to Chris and Nick and Danielle for sharing their ideas and their time with us today. The bigger picture is this. How do you get around the right people, the people that influence your thinking? This is a great way, podcast, where you get to hear a lot of different voices. Today on the program, a lot of different voices. I had a chance after I emceed that panel to come back into the green room, and there was Danielle, and there was Doug Casey, and there was Chris Martinson, but also in the green room, Dr. Mark Skousen, Robert Kiyosaki, Peter Schiff, and it was buzzing, and they're all talking about money and the future, where money's going, and I'm like, man, I wish I was a fly on the wall. hey, wait a minute, I'm in this conversation.
You betcha.
And you can be too. Next week on the program, super excited to have Chris Martenson, the author of Prosper and the Crash Course, to be with us. We're going to do a deep dive on what he calls social capital. That is, who in your network can you lean on? Who do you have in your Rolodex? Who can you pick up the phone and call when you have great ideas? It's the area of the 8 areas of capital that when they test people, it is the lowest. For us, I think it's our highest.
Yeah, we just went and saw Ringo Starr a little while ago, and one of his classic songs is With a Little Help from My Friends.
Yeah.
And I think that's really what it's all about. You can do almost anything with a little help from your friends. Key is you got to build that friendship. You got to build those bridges.
Absolutely. The challenge of the program like this is like it's saying, hey, sorry you missed it, but don't worry. Brian London's going to have another event next year, and we're already on our website collecting names for the advanced notice list. We don't have all the details about how to register yet, but will in the coming weeks and months. So all you have to do is go to the website at realestateguysradio.com and click on events. You'll see the New Orleans Investment Conference for next year and just get on the advanced notice list. And that way you'll be on the invite to the Real Estate Guys stuff that we do, and you'll get to be first in line to get your tickets. Big thanks to Brian London for being such an amazing host this week in New Orleans and putting on a tremendous event. Thanks to our speakers today. And of course, next week, really excited about having Chris Martenson back on the show. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.